A very common investment banking interview question is, what is an LBO? Walk me through an LBO model. In this video, I am going to show you exactly how to answer this question. Hi, I'm Naasir. I started in investment banking in 2013 and I've recruited and interviewed over a dozen candidates. If you're new to this channel, then you might want to consider subscribing, because every week we release a lot of content on how to break into investment banking. Whether you're looking for interview answers, resume templates, cover letter templates, we cover a lot of stuff which is extremely useful. So in essence, an LBO is when a private equity firm or a group of private equity firm purchases a company using a large amount of debt, whilst only putting down a small amount of their equity. A successful LBO will be when a private equity firm buys a company using a large amount of debt, but over time have that company pay off the debt. So therefore, it reduces the debt level whilst increases the private equity firm's equity amount in that company. So 10 years down the line, when they go to sell this company, they can therefore increase their rate of return because their equity level in this company has increased. An easier way to think about an LBO is the mortgage market. If you wanted to buy a house for, let's say, $500,000, but if you were only going to put down $50,000 as deposit and then borrow the $450,000 from a bank, if you rented this property out, but then over the span of 10 years, you use that rent in order to pay down the debt, when you go and sell this house, because there's no longer any debt on it, you own the full amount of the house, you can literally recuperate the whole $500,000. But remember, initially you only put down $50,000. So this is a huge rate of return. And that's essentially what private equity firms do. They buy companies using a lot of debt, pay down the debt using the company's own cash flow, and then sell it down the line. Private equity firms and LBOs are really important to investment bankers because a lot of investment banking clients are private equity firm, especially if you're going to work in the leverage finance department of an investment bank. And this is where you're going to be dealing with a lot of private equity firms. So it's really important as a junior investment banker, whether you're going to be an analyst or an associate or even an intern, you are going to get asked questions on private equity, how they finance their deals, how they value companies. It's really important that you know these questions and how to answer them successfully. So let's quickly go over a very common interview question, which is, walk me through an LBO. Now, essentially, you do this in 6 steps. Step number 1. Here, you're going to have to do some analysis as to what price you can offer the owner of the company in order to close the deal. So how much do you have to pay the owner of this company in order for them to sell you this company? There are 2 ways you can do this, either by looking at an exit multiple, so whether they want 6 times their revenue, 3 times their EBITDA, 4 times their EBIT, whatever multiple it may be, or you can look at a premium on top of their current share price. And using that, you can pretty much get a good idea as to how much you have to offer the business owner in order for them to sell you all their equity in this business. And then the exit multiple. Now, you can do a quick assumption here of assuming you're going to sell this company on the same multiple as you bought it at. Step number 2, sources and uses of capital. This is where you're going to be allocating capital blocks to the purchase price, the fees for the investment bankers, the fees for whoever is involved in this transaction. Every use of fund you're going to have to allocate here, as well as the sources. Once you've calculated where your fund is going to go, so how much you're going to need to buy this company, how much you're going to need to pay in fees, etc., you're then going to need to analyze how and where you're going to be raising this capital. So whether you're going to raise a new loan, whether you're going to need mezzanine financing, etc. This is where you're going to analyze how and where the money is going to go. Step 3, pro forma balance sheet. So once we've made all of our assumptions on the entry and exit price, the sources and the use of capital, we now need to forecast or create a pro forma balance sheet of the company that we're going to acquire, so that we have a better idea as to whether this company can handle this new amount of debt on its balance sheet. Does it have enough capital in order to pay off this debt? We have to analyze that. Step number 4, creating the financial model. So once we've created the pro forma balance sheet, we can now begin creating the financial model. Now, I'm not going to go through this step by step here. You can take a look at the financial modeling course for a step-by-step guidance on how to create all of this. Step 5 is the LBO analysis. So once we've created the financial model, we now need to analyze the feasibility, the profitability, and the risk associated with this LBO. So we're going to look at the internal rate of return and the multiple on investment. Finally, step 6, we're going to run a sensitivity analysis. Now, this is very important because our model is going to be heavily assumption based, and we need to stress test our model. So we need to take things into the extreme and assume that some things are going to go wrong, as they always do. So even if things go wrong, do we still have sufficient cushion to allow us to be profitable in this endeavor? If so, then we should go forward with it. But if our margin of error is so narrow, then it might not be worth taking this risk. And so a sensitivity analysis will give us an indicator as to how sensitive our model is to our assumptions. Okay, so now that we're done with walking through an LBO, other common follow-up question is, what is a great LBO candidate? What is a bad LBO candidate? Can you talk to me about a recent LBO deal? How might we increase the internal rate of return for a PE firm? How do sources and use work? Okay, so now I want to talk about who uses this LBO model. Now, essentially, there are 3 parties involved in this. You have the buyer, which is the PE firm. You have the seller, which is the company. And then you have the financiers or the investors, whether it's a hedge fund, whether it's an investment bank. Now, all 3 of these participants are going to have to make an LBO model. And depending on who they are, the level of complexity is going to differ. So, for example, if you're the financier, if you're the investor, then you're not going to create a 70 or 100 page LBO model with all the bells and whistles, because all you care about is whether or not this company or this firm will have the ability to pay interest as well as capital over time. Because as the investor, that's all you care about, your rate of return. But if you're the buyer of this company, then you want to know about the capital structure, the cost, the revenue. Can you increase the price on per unit of the product that they sell? Can you cut costs? How much does it cost to make one good? Can we increase this value? Can we increase the price of this? You want to make a highly detailed LBO model with every bell and whistle. So the level of complexity on the buyer side is going to be very different from the financier side. Likewise, from the seller side. The seller has an incentive to maximize the price which they can get for this company, whereas the buyer has an incentive to minimize the price. So they're literally fighting at odds with each other, and they're going to have to negotiate on the price. And because of that, they're going to use a lot of complicated financial metrics and a lot of financial engineering that's going to go into making this deal work. Okay, as usual, if you have any questions on LBO investment banking, whether it's interviews, LBO modeling, please leave it in the comment section below. I'll try to answer it there. If I don't, then I'll answer it in the next video. Otherwise, all of the investment banking interview questions and answers are in the interview guide. And if you'd like to know how investment bankers do an LBO analysis, then check out our investment banking training course.